Now, we all know the economy is bad. We all know that inflation is horrible. But do we know why? Do we know how we got here? Do you understand when people start talking about the nuances of the value of our currency and why things cost a whole lot more now than they did just a year ago? What made that happen? And did the cryptocurrency craze actually contribute to all of this? Well, hopefully we'll try to get some answers to all of that with the director of FreedomWorks Center for Economic Freedom, John Tamny, who's also author of the brand new book, Money Confusion, which is out today. So John, thank you for being here. I know you're busy with the new book. Thank you for being here. So what is money exactly? I mean, how does it relate to the cost of things, or how does the cost of things relate to the value of money? That's really the crux of inflation, isn't it?
Well, it's a great question. No one earns money. People earn what money can be exchanged for. You go to work for dollars, but you want the dollars because they can get real goods and services. And so you think about that in terms of inflation. Inflation is a devaluation of the currency. You see it in the markets. You'll see the dollar decline.
That's funny, because we always think, oh, inflation is the cost of things going up. No, it's the value of the money going down.
All sorts of things can go up in price for all sorts of reasons. That's how an economy organizes itself. They could discover that tangerines cure heart disease and the price would go up. Would that be inflation? No, because for paying more for tangerines, we have fewer dollars for other things. Inflation is specifically a devaluation of the currency.
Now, a lot of people point to the last stimulus checks that went out in March of 2021 after the Biden administration began. They really wanted another influx of cash, so they printed a lot of money that we didn't have, and then that flood of cash devalued the currency. Do you agree? Is that part of it?
No. Government spending is a huge economy burdening tax. But that is not devaluation. And in fact, in the last 2 years, we've seen the dollar rise against the pound, against the euro, against the yen, against the Chinese yuan, the Canadian dollar. It's risen against gold, the most objective measure of a currency's value. What we've seen, and this is why I argue it's not inflation, is we've seen the bitter fruits of the lockdowns that continue to make goods expensive.
I see. So, well, that brings us to part of the thesis of your book, and that has to do with cryptocurrency, right? And then we're talking about Bitcoin and other cryptos. It crashed huge. I know friends who made a ton of money on Bitcoin, and suddenly now those numbers have just plummeted. How did that factor into this equation, or did it?
It's interesting because the argument always for crypto was that it will be an inflation hedge, but people are saying there's inflation now, yet crypto's declined, and so one or the other is incorrect here. But I do argue in the book that the crash of crypto is paradoxically the sign that it's going to be the future of money.
Oh.
You have to look at the internet in the early 2000s, so many companies died. That was a signal of health in the sector, as in the good ones were going to survive.
You mean the tech bubble?
Yeah, the quote tech bubble was in fact just a healthy correction whereby we got rid of a lot of lousy companies. Think pets.com, theglobe.com. That was a good thing. I think we're seeing that again today. The crash in crypto is the sign that markets are getting wise. They're going to push out what doesn't work as money, and they're going to keep what does work.
So are you saying that the dollar eventually is not going to work as money versus Bitcoin?
My guess is that the dollar is going to be improved, not necessarily by Bitcoin, but by competition from private money. Mm-hmm. Let's never forget that money was not a creation of government. Money was a creation of producers. They needed an agreed on measure of value so that they could exchange the real wealth that they were producing. And so money was a natural, and that's what I argue in the book, money is a natural market phenomenon, as natural as the creation of cars and trucks and computers and the shirts we wear.
Right.
And so what I think is going to happen is that private money that holds its value is gradually going to replace government money around the world that's historically been so unreliable.
So this is what people freak out. It's like if the government isn't controlling or determining the value of money, and I recognize they don't now, the markets basically determine that, I suppose, correct me if I'm wrong, or the banks or what have you. If the government doesn't have a big say in that, then who does? Because if it's the government, at least we can change our elected officials. We, through our democratic process, can have a say in it. But if it's privatized, then doesn't that mean just a couple of people with all the money get to determine the value of it?
It's a great question, but think about what happens when a private business fails you today. You stop patronizing it and you have numerous other options. And so with private money, The beauty of it is Amazon, if there are Amazon dollars circulating, or JP Morgan dollars, or Target dollars, if they devalue on you, you will never trust them again. Nowadays, when the U.S. Treasury devalues, and it's devalued at fits and starts over the decades, what choice do you have? You earn dollars, and so you suffer the bitter fruits of inflation. And so private money replacing it, market actors have an incentive to maintain good, stable measures. As we've seen throughout history, and this long predates the United States, devalued money is as old as government involvement in it. And so anything that will replace what the entity, government itself, that's been devaluing currencies for millennia would be a good thing.
All right, so John, hopefully we know each other well enough to know that if I say something stupid, you'll say, no, Larry, that's just stupid. So, but please feel free to. But would American Airlines miles be a good example or of what you're talking about here?
Of course it is.
So I own a ton of miles, right? And at any given time, I can buy a flight for, dollars, US dollars, and that changes literally daily. Or I can buy that same flight for the set amount of miles that American Airlines determines is the set amount for that flight. That rarely changes. So in a way, that's private currency.
That's private currency. You go into all sorts of places nowadays and say, do you take American Express? Do you take Visa? Do you take Discover? Who's to say that in the future we won't use other stable measures as currencies? And my guess is that's what we'll do. Not because I think all government's bad and it wants to get us, but because governments have a history of devaluing away their debt. Amazon could not do that. If you are earning Amazon dollars, they can't basically rob you of the value of your work. And so my sense is that's where we're going.
That makes that, I see how that would make it inflation proof.
Yeah.
It's determined specifically on that company. So if somebody's looking at a portfolio of investments right now, and a lot of times they have either gold or silver or one of the precious metals or Bitcoin as part of their investment package, is that truly an investment, or what is it? When you're buying Bitcoin, what are you actually buying?
Well, you ask the great question. You're asking, people are investing in cryptocurrencies, which is the surest sign they're not serving their mission as money. Money should never be a speculation. Money should be stable, precisely because money is helping you move around the real wealth. As in, you wouldn't want a foot ruler, a foot that changed in length all the time. Imagine what it'd be like for chefs in a kitchen if the length of the minute or second or a degree of heat changed all the time. There'd be chaos.
But the value of Bitcoin did just change
precisely,
drastically.
which renders it not a very good currency right now. If I say, hey, fix my bathroom, I'll pay you a Bitcoin now, one in 6 months and one in a year, you'd say to me, well, which one? The one that cost $68,000 a year ago, the one that cost $19,000 now, the one that cost $30,000 several months ago. That's not a way to transact. Historically, money held its value precisely because you wanted it to move the real wealth that you're creating. And that's where private money would be very good. I just don't think Bitcoin's going to be the one precisely because it is so volatile.
I see. So it's Bitcoin is the issue right now, not crypto. Really fast, in like 10 seconds here. What should the government do? If this is a quick answer, and if not, we'll have you back. What should the government do to solidify and secure the value of the dollar right now?
Quite literally, Treasury could announce tomorrow that we are pegging the dollar to, say, 1,000th of an ounce of gold and be done with it.
So gold standard.
Governments get what they want. Presidents get the dollar they want. That's been true under Democrats and Republicans for decades.
John Tamny, I feel a little smarter at the end of this segment.
Well,
that's very strange for television.
You should get
news
my
these
book.
days. There you go. Get the book. Get the book. Thanks for joining us.
Thanks for having me.
More to come on O'Connor Tonight.